Is it the right time to short Euro USD? In the last two episodes, we explored the undercurrents driving the stock market. But now, it's time to switch gears to the world's most traded currency pair, Euro USD. The Euro USD, a heavyweight battle that captivates every scalper, day trader, swing trader, and position trader alike. Why? Liquidity, tight spreads, a mirror of global sentiment. Right now, Euro USD is approaching a critical swing point on the weekly chart. To a pure technician, it screams, "Short me." The setup looks clean. Price action is tempting. But pause. Ask yourself, is this really the right moment to short Euro USD? Because while the charts may whisper down, the fundamentals are screaming up. Stay tuned. Let's break down why Euro USD may be on the verge of another leg higher, driven not by momentum but by macro warfare. Quick disclaimer. This video is for educational purposes only. I am not a financial advisor, and nothing here should be taken as financial advice. What you're about to hear is my personal view, based on research, experience, and market observation. Always do your own research before making any trading or investment decisions. US-China Tariff War Timeline 2025. February 1st, 2025, US initiates tariff increases. President Trump signs Executive Order 14195, slapping a 10% baseline tariff on all Chinese imports, citing concerns over fentanyl trafficking. Markets flinch. Risk-off begins. February 4, China strikes back. China retaliates with 15% tariffs on U.S. coal and LNG and 10% on oil and machinery. They also target American firms, launching probes into Google and placing U.S. companies on their unreliable entity list. March 4, U.S. doubles down. Washington escalates. Tariffs jump from 10% to 20%, with green tech squarely in the crosshairs, EVs, solar panels, and rare earths. March 10th, China goes agricultural. China answers with 15% tariffs on wheat, corn, chicken, and more. And then it bans U.S. lumber and suspends soybean import licenses for multiple U.S. firms. April 2, U.S. introduces a 34% reciprocal tariff. Adding insult to injury, the U.S. slaps a 34% reciprocal tariff on Chinese goods, pushing effective tariff rates above 50%. April 4, China mirrors the move. China fires back 34% across the board on U.S. imports, while walking away from TikTok sale negotiations. April 9, shock move. U.S. raises tariffs to 104%. Yes, you heard that right. The U.S. pushes total tariffs on Chinese goods to 104%, a direct and aggressive escalation. April 11, China's nuclear option. China imposes 125% tariffs on U.S. goods and suspends exports of rare earth materials, critical for electronics, aerospace, and defense tech. April 13, China targets Boeing. In a direct blow to U.S. aerospace, China instructs its airlines to halt all further deliveries of Boeing aircraft. It also suspends purchases of aircraft parts and aviation equipment from American companies. This isn't just tariffs. This is industrial decoupling. April 14, U.S. halts Nvidia AI chip exports. The U.S. bans Nvidia's AI chips from being exported to China, wiping out an estimated $5.5 billion in future sales. The message? No chips for you. April 18, U.S. targets Chinese ports. The latest move, the U.S. imposes port fees on all Chinese ships, calculates tariffs by tonnage, and begins to squeeze China's maritime routes. The trade war has officially moved offshore. The Euro-USD connection, macro over momentum. Now here's the punchline. Euro-USD has been climbing relentlessly since January 29th, right when tariff tensions kicked off. Since then, it hasn't looked back. Not a single significant dip, not a pause. With every tariff escalation, every export halt, every corporate retaliation, Euro-USD has soared. Why? Because this isn't just a trade war. It's a battle for global economic dominance. And the US dollar is caught in the storm. Investors are fleeing from uncertainty, rotating away from the USD and into safer, more stable, more neutral currencies like the euro. Macro view, this isn't over. Let's be clear, the US administration is not backing down. And China, it's flexing its economic muscle right back. This is no longer about policy. This is ego. It's now about who blinks first. Each side is finding new ways to disrupt the other, not economically, but strategically. And as long as this continues, Euro-USD will climb the geopolitical wall of worry. So should you short EURUSD now? If you believe this trade war is peaked, if you think both sides are about to cooperate, if you're confident the worst is over, then sure, go ahead and short. But if you, like me, see this for what it is, a slow-burning economic standoff with no exit ramp, then shorting Euro-USD now is like standing in front of a freight train. Final word. Until cooperation returns, until diplomacy replaces drama, Euro-USD remains a buy-the-fear story. This isn't just technical, it's deep macro. And the trend is not done yet. Like, share, subscribe. You're watching Markets and Global Trends.